Diane has called her bank 14 times this month. She knows this because she started counting after the 9th call, somewhere around the point where counting felt like the only way to prove to herself she wasn't imagining how long this was taking. A charge appeared on her account that she didn't make. $41, then again 3 days later for $63. Not life-altering amounts, just wrong, just hers to fix. Call 1. Hold music 11 minutes, a voice that takes her information and tells her someone will follow up. Call 6. A different voice, no record of the first 5 calls, taking her information again. Call 11. A promise that this is now escalated, whatever that means, delivered in the same calm, scripted tone as everything before it. She's not angry exactly. She's tired in a specific way, the tired of doing everything right and still getting nowhere. She paid that money in. She's been a customer for 19 years. None of it seems to matter to whatever is on the other end of that phone number. What Diane doesn't know, what she has no way of knowing, is that 3 miles away, at a branch of the exact same bank, someone else picked up a phone that same week with an almost identical problem, and it was over in 2 days. This is where we start, not with an explanation, with a question neither of them would think to ask, because neither of them knows there's anything to ask about. Here's the strange part, if you stop and actually look at it. Diane isn't a bad customer. She's not behind on payments, she's not disorganized, she's not difficult on the phone. By every measure that should matter, she's exactly the kind of customer a bank would want to keep. And yet, something about how she's being handled feels less like service and more like she's being processed, moved along, handled, in the way you handle a line of people rather than a person. If you've ever felt that, the sense that you were talking to an institution rather than being helped by one, you already know the feeling we're describing. Most people chalk it up to bad luck, a busy day at the call center, an employee having an off week, the kind of thing you complain about to a friend and then forget, because what else would explain it? Except here's the detail that doesn't quite fit that explanation if you look closely enough. It isn't random. It isn't occasional. Ask around, actually ask people, the way you might ask about a doctor or a mechanic, and you'll start to notice something odd in how people describe their banks. Some people describe exactly what Diane is living through. Hold music, scripts, strangers every time. And then, every so often, someone describes something that doesn't sound like the same industry at all. A man named Robert, not someone with an unusual job, not someone with an obviously unusual amount of money, by any visible measure just another customer, mentions, almost as an aside in conversation, that his bank called him. Not the other way around. His bank reaching out to flag something on his account before he'd even noticed it himself. He didn't ask for that. He's not sure, even now, why it happens that way for him and not for people he knows. He just assumes that's what good banking looks like, because it's the only version he's ever personally experienced. 2 customers, 2 banks that are, technically, the same bank. 2 completely different relationships with the same institution, and neither one of them has any reason to think there's anything to compare, because neither has ever seen the other side. That's the part worth sitting with before we go any further. Whatever is happening here isn't visible from either position. Diane has no way of knowing Robert's experience exists. Robert has no way of knowing his experience is unusual. The difference is real. It's happening right now, to real people, and it is completely invisible to everyone living inside it. So what is it? Let's follow the trail a little further, because the first clue isn't in either of their stories. It's in something almost nobody reads. Major banks publish what they call relationship tiers, checking and savings programs with names like Premier or Private Client, each one listing a minimum combined balance a customer has to maintain to qualify. This isn't hidden from regulators or kept off paper. It's published openly on bank websites and in account disclosures, the kind of page that exists because the bank wants to sell the upgrade to customers who already qualify, not because it wants the customer below the line to find it. Diane could read one of these pages tonight. She simply never had a reason to look. What they describe, in plain marketing language sitting right next to the dry legal disclosures, is a structure most customers never connect to their own daily experience. A system that sorts customers into different categories of service, based on one specific number, the combined balance a customer keeps with the bank, across checking, savings, and investments. The published minimums vary by bank, but they cluster in a consistent range, some starting as low as $100,000 combined, many sitting between $250,000 and $1 million, depending on the institution and the tier. Cross whichever line a given bank has drawn, and the published benefits start to sound almost unbelievable if you've only ever experienced banking the way Diane has. A named relationship manager, a direct number, waived fees, faster handling for exactly the kind of problem she's been stuck inside for 3 weeks. This is the first real piece of the puzzle, and it changes how you'd read everything that came before it. Diane's 14 calls were never really about Diane. Robert's unprompted phone call was never really about Robert being a more important person. There's a number, somewhere in the low to mid 6 figures, depending on the bank, sitting underneath both of their experiences, deciding things neither of them asked it to decide. But knowing the number exists doesn't yet explain why it exists, and that's the question that actually matters. Picture the bank side of this for a moment, because the answer isn't where you'd expect to find it. A checking account holding a modest balance generates a small amount of revenue for the institution, interest spread, a handful of fees, transaction income. Not nothing, but not much. Now imagine the cost of giving that account the kind of service Robert gets, a dedicated person who knows the file, who calls proactively, who can resolve a problem in 2 days instead of 2 weeks. That kind of service is expensive. It requires paying someone whose entire job is knowing a relatively small number of customers extremely well. Multiply Diane's account by millions of similar accounts, and dedicated service for all of them stops being a business. It becomes a cost the bank cannot sustain. But an account like the one sitting above that 6-figure line generates real revenue, enough, reliably enough, that paying for a dedicated relationship around it isn't generosity. It's protecting something that's actually profitable to protect. So a structure got built, quietly, not announced, not explained, because explaining it would mean saying out loud that everyone below the line is being served at whatever the bank can sustain at scale, and no institution wants that sentence printed anywhere a customer might read it. This is the part that should change how you're picturing this. There's no person deciding case by case that Diane matters less than Robert. There's a number, running the background, sorting accounts the way a spreadsheet sorts anything without malice, without even awareness, just doing exactly what it was built to do. That number isn't the same at every bank either, and it isn't chosen at random. Each institution calculates its own version, built around a specific internal question. At what balance does an account become profitable enough to justify dedicated human attention? The math accounts for deposit spreads, the chance of selling additional products down the line, the cost of paying someone whose entire job is knowing a small number of files extremely well. A bank with lower overhead, or a different lending model, can sustain that kind of attention at a lower number than a competitor can. None of this is published anywhere a customer could compare it side by side. It surfaces only in fragments, a qualifying minimum mentioned here, a program name referenced there, the closest thing to a visible edge on an otherwise invisible line. Diane, on her 11th call, isn't thinking about deposit spreads or relationship manager economics. She's thinking about a $63 charge that still hasn't been reversed. But this is the arithmetic sitting underneath her phone call, whether she can see it or not, the actual, mechanical reason a stranger on the other end keeps starting over. Which raises an uncomfortable question. If this is just arithmetic, if it's this logical, this old, this baked into how banking actually works, why does almost nobody know about it? Here's where it gets stranger, because the answer isn't what you'd think. It would be easy to assume this is new, some modern, data-driven sorting system, built recently, made possible by software that didn't used to exist. It isn't. Private banking, in some form, has existed for centuries, institutions built specifically to serve wealthier clients differently, long before retail banking for ordinary depositors existed at all. The order most people assume is backwards. Most people picture basic banking as the default, with an elevated tier added later as a kind of luxury option for those who can afford it. The history runs the other way. The elevated tier came first. The version Diane experiences, the cue, the unfamiliar voice, the script, is the newer invention, built later, once banks needed to serve millions of ordinary depositors at a scale the original model was never designed for. So this isn't a flaw that crept into banking. It's closer to the original design, with a second system built underneath it once banking expanded to everyone. And the reason almost nobody notices is almost embarrassingly simple once you see it. Diane has no comparison point. Her experience simply reads as normal, because nothing in her life ever places it next to the alternative. And Robert, on the other side, had no idea his experience is unusual either. To him, it doesn't feel like an upgrade. It feels like banking. It's the only version he's ever known. Nobody on either side of the line experiences it as a line. That's not an accident. That's the entire reason it's lasted this long without anyone outside of it noticing. It's why Robert, describing his bank to a friend, doesn't say, "I'm in a relationship tier." He says his bank is good. That's the only sentence he has for it, because nothing in his experience has ever needed a more specific one. There's a quieter detail buried in all of this, and it's the part that would surprise both Diane and Robert in different ways. The line isn't fixed. It's not something you cross once and keep forever. Banks that publish these tiers typically review them on a recurring cycle, some checking monthly, others quarterly, comparing a customer's current balance against the tier they're sitting in, and reassigning them if it's slipped. Which means Robert's experience isn't guaranteed to stay Robert's experience. Move money out for a house, a tax situation, a difficult year, and the tier can quietly reverse. No letter, no explanation. The relationship manager who knew his file simply stops being his relationship manager, and one day, without ever being told why, his bank starts to feel like a different bank than the one he remembers. And the reverse holds for Diane too, in a way she'd have no reason to expect. If her balance ever crossed that same line, through an inheritance, a settlement, years of saving finally compounding past the threshold, the calls that took 3 weeks might start taking 2 days, not because anything about her changed, because a number she's never seen finally agreed with itself. The line, in other words, was never a verdict on who either of them is. It's a live measurement, recalculated constantly, completely indifferent to anything except where the money happens to sit on a given day. So how does anyone find out this exists at all, if neither side of the line can see it? Almost never from the bank itself. It tends to arrive sideways, a financial advisor mentioning in passing that a certain balance tends to unlock a different kind of account, a friend describing a customer service experience so unfamiliar it doesn't sound like the same industry, a single word from a banker program, used once, never explained, easy to let pass without asking what it means. For most people, that moment of discovery never comes at all. The upgrade, if it ever happens, simply feels like a slow, unremarked improvement in how a bank happens to treat them. The absence of it, for people like Diane, simply feels like banking, the only version she's ever known, the same way Robert's elevated version is the only one he's ever known. 2 people, 1 bank, 1 number sitting between them that neither of them has ever seen, and that, until a few minutes ago, neither of them had any reason to suspect was there. Think about what that number actually did to each of their weeks. Diane's fraud case sat in a general queue, picked up by whoever was free, re-explained from scratch each time. No single person carrying it from start to finish. 3 weeks, 14 calls and counting. Robert's case, the one time something similar happened to him, went to one person, who already had his file open, who called him back the next afternoon with it resolved. Same kind of problem, same bank, two timelines that never had any reason to intersect, decided entirely by a number neither of them was in the room for. Go back to Diane for a moment, on her 14th call, still waiting. She isn't wrong about anything she's felt. She isn't imagining the difference between what she's getting and what she suspects, somewhere, other people are getting. What she didn't have was a name for it, a reason that wasn't bad luck, or an off day, or some quiet, unspoken verdict about whether she matters. She does matter. The number was simply never about that. It was never about her at all. And once you can see that clearly, once you understand what it looks like for an entire system to sort people without any single person deciding to, you start noticing the shape of it in places that have nothing to do with a bank. A line drawn somewhere you can't see, that decides how quickly your claim gets reviewed, how carefully your paperwork gets read, whether the system on the other end treats you like a relationship or like a case number in a queue. Different number, different institution, same quiet architecture, built for the same reason, invisible for the same reason, sorting people who have no way of knowing they're being sorted at all. Banking was never really the whole story. It was simply the clearest place to show you what one of these looks like, because it's the one most people have already felt and never had a name for. The number was never the point. The fact that it exists at all, quietly, structurally, in places you'd never think to check, that's the part that doesn't end when this video does. If one invisible line has been shaping how you're treated for years, without you ever seeing it, the only honest question left is how many more you're standing on right now.